What's going on, guys? Thanks for joining my channel, Robinhood. This is Bob. Today is Monday, August 31st. Just want to thank you guys trying to get to my 100 subscribers. Each day I'm getting closer and closer. So if you guys like what you see and hear, please definitely hit the subscribe, like, and comment below. Today we are going to go over a lot of things. We're going to go over the importance of August 1st, 2020, especially for travel industries. We are also going to go over the TSA checkpoints that you guys should be checking every week, at least if you are invested in airlines, and also my spreadsheet so far for US Global Jets ETF. I believe this is week 3. So let's get started. So the TSA checkpoint traveler. So this is something you should check every week. In theory, you want this to be going up every week just to show how many travelers are flying each day, each week, or each month. So this is just from this week, from the travelers of 2020 and then 2019. So I did do kind of a little spreadsheet to show you guys. So the TSA update passengers. So I did do this ETF 3 weeks ago. So 8/16/2020, there were about 5 million travelers in 2020 of the week of 8/16. 2019, just over 17 million. So we're sitting at 29%. The week of 8/23, we're at 29.4. In the week of 8/30/2020, we're at 29.8. So this is a good sign that is somewhat of an upward trend, a lot slower than I would like it. But I believe in the next few weeks, the traveling percentage could go up for a couple reasons. First is a lot of people are doing stay at home for the school, so it gives a lot more flexibility of traveling somewhere. Doesn't have to be out of the country, just be somewhere else, and students can just do their work as long as they have a laptop and internet connection. So I can actually see travel from this percentage from last year actually going up. So let's look at August 1st. So the importance of August 1st, it's a couple things. So you guys are familiar with the CARES Act package that was passed. It's Coronavirus Aid, Relief, and Economic Security Act. So airlines, to receive money, airlines would not be allowed to furlough or lay off employees. So this expires on October 1st, 2020. So when the second package comes out, it's a possibility that it may include the salary payroll protection again. So this could slow down the furlough or layoffs from airlines. But a couple airlines already kind of gave a heads up that they are getting rid of some people. But if it's not passed, they're estimated it as high as 70 to 80,000 people in the U.S. airlines could get laid off. So right now we went over the numbers with the checkpoint. So people are flying around 30% from last year. So it's less than 1/3 of the money bringing in is generated. So they definitely are overstaffed, and without that second act to be passed, then they definitely will be laying off a lot of people. The bad thing about it is if they do lay off 70 to 80,000 people overall, they may not be able to maintain the quality of the flights, the safety protocols from like COVID-19, like cleaning it up regularly, and just regular maintenance. So if they have issues with engines or maintenance or stuff not being able to actually fly, this could be a definitely negative effect and could scare people from flying. Also, experts predict that they may not be back to normal amounts of flying until 2024. So this is not including if a shutdown happens or even if this is a faster vaccination. So if there's a vaccine that comes out sooner than later that actually works, then it's definitely could be sooner. But right now they're predicting it's going to be around 2024. So that's 3.5 years from now. So that's definitely a long time. So that's the main issues with October 1st. So that's something you definitely have to look to, and also keep a track of the TSA checkpoint travelers, because that's definitely a good sign. If that number is going up, then that's more money that the airlines are getting. So let's look at the spreadsheet that I have. I've been doing this for a couple weeks, and it basically just tells you where I started with this investment of US Global Jets and then where I am at currently. So let's just check out the stock itself. If you're not familiar with US Global Jets ETF, it's a basically has top four airlines and a bunch of carriers, Alaskan Air, United. So it's all in one. So if one particular airline is doing real horrible, you're not going to get hit as hard as having an ETF like this. But also, if an airline is doing better than all the airlines, you're not going to get the highest percentage. It's usually somewhat in the middle, but it's the safest bet overall, in my opinion, to get an ETF for the airlines. So for the day, it definitely was a red day. They were sitting at negative 2.95%. They did gain a little bit of ground at 0.11% after hours, but they've been doing pretty good though. So for the week itself, they are up 0.06%, and if you look at the month, they're actually up 16.83%. So like I said, this is 3 weeks ago. I did get this around 15.50, so I'm up a pretty good amount of money. So let's see how much I am up. Look at the spreadsheet here. So the first week, my initial profit was 202.49. The second week, initial profit is 285, and then even last week was at 294. So I've definitely been slowly growing the money, but also on the side money here, I've been making a good amount of money on the calls, selling calls and puts. So my options that I've done, if you look at it through the week, I did sell calls expiring here. I did get a premium, $15 for one contract, $10 for two contracts here. So if you scroll down to the sell put, so I did a call here, 824, and it did expire. This one actually did get executed. So this is the only one so far that did not expire, worthless. But let me go over with you what I did and how I still actually profited from it. So this was actually a better scenario than me trying to buy it out or not doing this at all. So me selling this call at an $18 strike price, it gave me $15 times 3 contracts, so it gave me $45. So technically my break-even price was $18.15. It was at 18:30 at the end of Friday when it did expire, but when it opened up today, it definitely had a big red day. So if you're selling a put, I always buy when it's a red day. If you're selling a call, I always buy on a green day. You get more premium that way, and people that are, just day trading, when it's green, they like to sell off on the high, and then when it's red, they like to buy. So higher chance that the stock is either going to go up or down if you're buying it, vice versa. So I did actually sell a put. It expires on the 4th of September at a strike price of 18.50. I don't believe it's going to hit 18.50. I want to have the stock back so I can sell the calls, because selling calls is a little more safer for me, and also I like to include the gains on the net profit here. But I did get a pretty good premium at $75 per contract, so it's $225. So far, just in the 3 weeks that I've been doing this, almost 4 weeks, I got $110 in premium, but I could have $335 in premium if this expires worthless. If not, I will adjust it to see what the profit is going to be, and that'll be in this end instead of this end. So let me just give you a quick rundown of what I did. So basically, I sold 3 puts at 18.50 of US Global, expires 9/4. So the bid at the end of today was at 0.75 is the low end. The high end ask is at 0.90. The mark is the average at 0.825. The last sale, I believe it was just one. It was 0.85. So the highest that someone bought this was able to get this premium was $88. The lowest was 55 bucks. So I'm somewhat a little bit higher than the middle. So my premium was $75, giving me 225. So let me go over why me selling my 300 shares at $18 was a benefit. So the break-even price of doing this, selling this put, would be $17.75. So I had to sell all 300 shares at a price of $18. So if you took the $18 what I sold it for, and my break-even price that I have now is 25 cents that I've gained since when I sold it. So the profit of just letting the sales be executed was 25 cents per share times 300. So just doing this and not holding on to it or trying to buy it back, I actually gained an extra $75 from doing this. So the reason why I didn't buy it back, because I do want to hold these shares, is because I felt like it was up 16% for the month, and Friday was definitely a really green day. So I did think it was going to be some type of pullback. And it was. It definitely was. I actually could have got a premium a little higher, but 75 per premium was definitely worth it, and also giving me a profit of $75 by executing this and picking a strike price at $18.50. Most likely I will be assigned these shares, so my 225 probably won't be 225, but even if I gain anything, it's still better than holding on to it in the long run, since it gave me a break-even price at $17.75 instead of 18. So that's going to be all for today, guys. I know there's a lot of numbers I went over with. If you are a little confused, just shoot me a comment. I'll try to explain it a little better if you have a question. But like I said, guys, I'm trying to get to my 100 subscriber goal. So definitely hit the subscribe if you like this. You want some more info, it helps the channel. Hit the like button and definitely comment below. Thank you, guys. Have a good day.